Hey folks, welcome to a product review at Finominal. In this video, we are going to look at another international fund, which is the Mira Asset NYSE FANG ETF. So this trades under the ticker MAFANG, and it's managing about a decent AUM of about 3,000 crores and charging an expense ratio of about 0.65%. And one thing that should be alarming here, which is 12 holdings. MAFANG has 12 holdings, and since it's a NYSE, right, it's an international, it has international equities in it. It only holds the top 10 stocks in the US market, right? So basically the top 10 tech stocks, right? So these are like the Apple, Meta, Nvidia, all these big companies, just the top 10. So it's like S&P 500 holds 500 stocks, NASDAQ 100 holds 100 stocks. This holds only 10 stocks, right? So when you compare this to simple NASDAQ 100, right? So you can see periods of underperformance here, but also periods of outperformance here, and this is not like a consistent outperformance. So now it kind of like begs a question, right? So why not top 5? Now why not top 20? Why not top 15, right? So again, if you look at the performance here, it has done well, but doesn't mean that this is like a good product, right? To me, I'll just show you one example of why this product is probably the most volatile, right? Because you're essentially holding the top 10 companies in the US, right? So basically these are like Nvidia, Broadcom, Apple, Alphabet, right? And you top just 10 companies, you sum it up to 100%, right? Whereas NASDAQ has about 100 companies, and you're much more diversified, right? So in terms of drawdowns, this is much more riskier and than the NASDAQ itself, right? So mind that we are just this fund got launched after COVID, right? So during COVID it got done even worse. So what are the alternatives, right? So the alternatives, we can quickly look into the cheaper alternatives are like basically the Mira asset, the FANG is the one that we are analyzing. The cheaper ones are like you can look into the Motilal Oswal NASDAQ 100 ETF. There are also other cheaper ones, right? So there's one from Navi, which is charging only 0.16%, right? Which is compared to even Motilal Oswal, it's on the lower side. This one is like fund of funds, whereas like the Motilal Oswal, they are managing their own portfolio, right? When I say portfolio, they are just managing the top 100 stocks by themselves instead of buying another fund like Navi is doing. So when you quickly analyze the performance of MAFANG, Mon100 as well as Navi, so both these two funds, the one in the yellow and green, they are tracking NASDAQ 100, right? So that's why you see similar performance there, and you can see again like periods of underperformance during market COVID market, the 2022 market sell-off, and post that it has not performed well because of the bull run, right? As I've highlighted even before, right? So you can see that this fund is much more riskier in terms of drawdowns as well as in terms of volatility, right? So you can see that this is much more volatile than the NASDAQ 100 ETFs here. So that kind of reflects in the statistics tab as well, right? So your volatility is essentially 31% here compared to 23%. Like both these funds have 23% because of this heavy focus on just top 10 companies. Your return, basically the return goes up, and hence you have a highest Sharpe ratio, but also you have a comes with a higher volatility and a very high maximum drawdown. Finally, we'll end this analysis with the top 10 stocks, right? So as we already seen, the NASDAQ 100, the Motilal Oswal is managing about 100 stocks, right? Whereas the Navi NASDAQ is simply a fund of one, which is holding another fund. This one is holding about 10 stocks. So when you look into the top 10 stocks, right? So as I mentioned, the Navi is just holding this ETF from Invesco, whereas the Mira asset, you can just see the top 10 stocks, right? So it is 10%, 10%, 10%, 10%, right? The top 10 stocks in the Mira asset sums up to 100%, right? Whereas in Motilal Oswal, it sums up to 46%, right? So essentially, this fund it's very concentrated. It's much more volatile than NASDAQ 100. Has more risk in terms of drawdown, and it has periods of underperformance and also periods of outperformance, that too in the last 2 years because of the bull run, right? I think that kind of sums up this video. Before I end this video, if you are watching this video and if you are a mutual fund distributor or a financial advisor or someone who's very very much into portfolio analysis and managing clients, we have built the best portfolio analysis tool in India and for Indian customers and for Indian professional investors. Go to Finominal.com, do check it out. We have built a suite of 10 different tools which will help you analyze any mutual fund, any ETF in depth. This is only provided by Finominal.com, and you can't even get the sort of analysis, the sort of the factor exposure analysis, and the way we dissect the risk of the fund, and the way we show you the alternatives to find different funds and invest in cheaper and much better alternatives, which you have already seen in this video. Go check it out. Go to Finominal.com and try it out tools. Thanks a lot for watching. See you next time.